All right, so I've been in Florida for a little over 3 years now, and I've noticed more and more hidden costs of living here. Let me break these down for you. I'm Sam, and this is the Living in Tampa channel, and we make these videos for you about what it's like to live and move to Tampa. We're also a team of realtors here in the area, and we'd love a chance to earn your real estate business. Give us a call, text, or email anytime. We'd love to hop on a Zoom call or phone call and just process your move, potential move, whether it's right now or it's a few years from now. Let us see how we can help. So I moved here in 2020, as you know, a lot of you know, from Colorado. At the time, real estate was cheaper here. At the time, a lot of things were cheaper here. And there were certain things I knew were gonna go up, like my insurance costs, like my property taxes, like my car insurance. But they've gone up differently than I expected. Of course, we talked a lot about insurance with my other house that flooded, those kind of things. We'll hit on that a little bit. But I wanna talk about all these things that are just kind of sneaky, you can't get away from unless you leave. And that's what brought about this video, actually. I was talking to some clients, Robin and Jacqueline, who are actually selling their home here. They're retired. It's just not quite affordable for them anymore. Those fixed costs that they thought would stay fixed have just crept up a little bit. And I'm not talking about the ones that you might expect, not like their HOA costs, because they do live in an HOA community, not those kind of things, not their mortgage, not even really their property taxes, because with the homestead exemption, those go up pretty slowly. But there's other things that have made it difficult for them to live here. Let's get into some of the hidden costs of living in the Tampa, Florida area. Okay, number one is car insurance. Car insurance, when you look it up online, they go on and on about how it's so expensive down here. When I first moved down here, I felt the sting of that, but it wasn't extreme. So my car insurance, like, let's break it down, per car was about $60 a month in Colorado. I have 2 cars. When I moved down here, it went up to about $80 to $90 a car. That didn't seem like really high to me. Then I had a car accident. I wasn't paying attention. I hit somebody on US 19, but my car insurance went up after that. It went over $300 a month. And we have good credit. We have cars that have some automatic braking. Now we do. Some of those things, and we also don't drive expensive cars. But it just kept going up. So since I moved here to 3 years later, my car insurance has gone up 100%. We have one claim in the past 10 years. We're in our mid-30s, so it's not like, it's confusing, but it's gone up 100%. And these clients were experiencing the same issue. With no accidents, no claims, their insurance just kept creeping up and up and up every single year. And my dad actually sells insurance in Oklahoma, and this happens a lot. Companies have to raise their premiums for all kinds of reasons, and this is not just a Florida problem, but I think it gets accentuated a little bit because we already have a little bit more expensive rates here. Okay, number 2, homeowners insurance. And this in general is a bit of a disaster, with insurance carriers leaving the state, with people really struggling to find insurance, oftentimes. And Citizens still being the majority carrier of the state, they're constantly trying to offload their customers, but it doesn't always work because there's not always affordable alternatives. But in the midst of this, even with Citizens, their premiums keep going up. And then on top of this is something I experienced at my other house. Because I was in a flood zone and I had flood insurance, the Citizens was my carrier of my homeowners insurance. They required more coverage on my flood insurance. So they required just a different minimum. They required a building coverage of $250,000 for my home, even though my insurance claim that has been paid out is way less than half of that. It's kind of chilly right now, and I just saw a text from my wife asking how to use the new thermostat. When I say chilly, I mean like high 50s. So not only can Citizens require you to have more coverage on your flood insurance, but let's say you're in a different kind of flood zone. You're in X500. This is one of the flood zones that your mortgage company doesn't require you to have flood insurance. And your mortgage company gets involved in that because they have this interest in your home. They want to make sure it's covered if something happens to it. But now, if you're covered by Citizens and you're in an X500 zone, you're required to have flood insurance to keep Citizens insurance. So now people that were on a fixed income that had, their expenses were pretty stable, suddenly they might have to pay $500 to $1,000 a year in flood insurance. Now, I've had way higher flood insurance than that, so it doesn't seem huge to me. But if it's a new thing that you weren't required to do before and now you are, it can be a real shock to your budget. Okay, let's hop into the third thing, the third hidden cost, flood insurance. And maybe you can avoid it. We've talked about flood insurance a lot. My previous home that was in flood zone AE, which is like the worst. I'm trying to be the example for you guys and learn from some lessons. But in that flood zone, when we first bought the house for $300,000, our flood insurance was $2,800 a year. Now we're about ready to sell the house. We'll sell it for around $500,000, maybe a little bit less. And our flood insurance is $4,600 a year. It's really expensive. It's $400 a month just for flood insurance. And then you have homeowners insurance, then you have taxes, you have all that kind of stuff combined. When you break down the mortgage payment of principal and interest and then taxes and insurance, this taxes and insurance part is way bigger right now than my other part of my payment. And maybe you can avoid these flood zones. But I have a client who is interested in this house that's very close to the beach, but not technically in a flood zone. After this past storm though, we're worried that it would get remapped by FEMA. So in the midst of our process of being under contract on the home, we're doing tons of research, connecting with anyone we can about the potential of this getting remapped. Because FEMA changes their maps. And maybe in the past, an elevation certificate was all you needed to prove that you were safe. It doesn't work that way anymore. FEMA has the technology now to map the land and predict the storm, something like that. Who knows? But they changed the maps and now they control the data, and it's not just based on elevation. It's based on all kinds of factors. Okay, another way that you can avoid paying for flood insurance is if you're self-insuring. So say maybe you pay cash for the home and then you just save money in case there is a storm. So to completely renovate my home that was flooded, and it's a 3-bedroom house, and there was 18 inches of water in it. Means all the drywall needs to be cut from 4 feet down. It means all kinds of stuff needs to be pulled out and redone. For me to completely renovate this home is about $60,000 to $70,000. So if you live in a bad flood zone like that, you might anticipate spending that every 10 to 20 years. Now, if I were to just not pay the flood insurance, say I paid cash for the home and I were to save $4,600 a year, then by year 10, I would have $46,000. It's still not quite enough to cover all of that. So you gotta think through these scenarios. But let's just go another scenario. Say you're trying to avoid flood insurance and you're paying cash. Say it's not in a bad flood zone. It's in flood zone X and it doesn't seem that bad, but Citizens maybe is your only insurance option that's affordable. So then you pay cash, you're insured with Citizens, but then Citizens requires you to have flood insurance because of the zone you're in, because of the FEMA mapping, and it's very tricky to avoid unless it's very clear cut that you're avoiding it. So we can help you navigate all that. Okay, number 4 is property taxes, and this is going to affect you more if it's an investment property than if it's your primary residence. So like many states, we have a homestead exemption. So if this is your primary home, you claim your homestead exemption, it gives you a little discount on your assessed value, and then it can only go up at 3% per year. So that means, the assessed value is $300,000, it's gonna be taxed on that. If you have a homestead exemption, it's gonna be taxed on $250,000 value. But then next year, that $250,000 can only grow by 3%, even if the value of the home grows 100%. So it's a very, very good benefit for your property taxes. But if it's a vacation home or it's an investment property and you don't have a homestead exemption on it, which if you're not living there, you technically can't have a homestead exemption on it. But in that scenario, it can grow by 10% per year. The assessed value the taxable value can grow by 10% per year. It is capped at that 10%, but that's a lot more than 3%. Okay, number 5 hidden cost is HOA fees. You know, the story in the beginning with Robin and Jacqueline, their HOA fees haven't gone up since they moved here in 5 years. They've been very steady, but they do go up sometimes. And more the way they go up actually is with a special assessment. Say you live in a condo building and they need a new roof, but you know, the cost of a roof has doubled since they set up those fees. So now they need more money from each resident to accommodate that increase. So oftentimes they're gonna, have some kind of meeting. They're gonna say, okay, everybody has to pay this chunk of money, or we can just increase your fees for the next however many years to accommodate this. There's all kinds of ways that this works, but this is a way that HOA fees go up in the long run. They're not always gonna go up really fast, but an assessment can really kick them up all of a sudden and really surprise you. When you're buying in an HOA community, or especially in a condo building, it's really important to dig into the financials, to have someone from the condo association board present those financials to you and see how they're managed and make sure you're comfortable with how they're managed. Of course, I'm not a financial advisor, so I'm not gonna get into that very much. I can give my opinion as a real estate professional, but it's a little bit different. Okay, number 6, let's talk about the cost of a roof. The cost of a roof has gone up about 50% since I moved here. Where I lived previously in Colorado Springs, we got tons of hail. Natural causes damages the roof. Insurance pays to replace a lot of roofs in places like that. Down here, natural causes don't do much damage to the roof. Now, if the wind blows off some shingles, it's really different than hail just like pounding it. And you have wind coverage for those kind of things, but that's not typically going to be a whole roof replacement unless it's a hurricane or something. So that is a factor. So typically, residents are paying to replace their roofs every, 20 years, let's say. And the sun is hard on it, the elements are hard down here, so sometimes it's sooner than that. But the cost of it just keeps going up and up and up. And roofers have actually decreased their prices recently, but the cost of these materials and the cost of this labor is still going up at about 20% per year. So what you're budgeting for your roof is going to be so much higher in the future. And that can be a little surprising, a little hidden, they might say. All right, the number 7 hidden cost is just the cost of everything. The Tampa area has seen some of the highest inflation in the US in the past 3 years. And let's just explain that kind of inflation. The price of things is higher than it was. And you're seeing this everywhere, but it's been a little bit higher of an increase here than in a lot of markets. So the cost of food, the cost of cars, the cost of fuel, the cost of travel, these kind of things are those sneaky things. And as I said in previous videos, I'm shocked how much money I'm spending on groceries lately. It's just gone up and up and up. I hope this list of hidden costs is helpful to you. I hope this story about Robin and Jacqueline provides some helpful information. And honestly, I think the market in Florida is going to change in the next decade. This is the thing about stating your opinion about these kind of things, is there's a record of it. But I think what's gonna happen in this market is it's gonna become less of a retiree market, because costs are not as stable as they used to be, and costs are not as low as they used to be. And this is gonna become just a more appealing market overall. More families, more businesses, all of those kind of things. So we'll see how all of this kind of turns the tides of these things. And I'm here to help you navigate it. I'm excited to see what's gonna happen. I'm excited to tell you all about it, and I'm excited to help you make the move to the area if that's what's right for you. Give us a call, text, or email anytime, and let's process that. Thanks for coming by.